What's happening? What's happening? What's happening, everybody? We want to welcome y'all to Plug In. We plug you in with the information that you need in order to make you successful. Man, do I have a great show for y'all today. I have the Tax Lady is in the building. She is going to be dropping some mad science, and we're going to be plugging you guys in with some things that you need to know in order to make you successful. So I want everybody, if you got a chance to, right while we get this thing prepped up and ready, I want you to grab your pen and your paper because I am going to be pulling some deep information and science out of the legendary tax lady, Miss Audrey Toles-Miller, coming all the way out of the Atlanta, y'all. Hey, y'all get ready for this, man. We're going to be right back. We're going to pay some bills right quick. If you haven't had an opportunity and a chance, please download the book. Please download the book. Get the book. Swimming with a Shark is my latest project that's out right now. It's featuring 8 other authors, ladies and gentlemen, including myself, telling our stories on how we became successful in this business. So these are a phenomenal way to start. So if you're having some reservations and some questions about, I don't know if it's the right time, I don't know. Hey, check out Swimming with a Shark, ladies and gentlemen. We're going to be dropping science. Now, let's get this thing started. What's going on, Miss Audrey Toles? Uh-oh, can you hear me?
Hello, everybody. How are you guys doing this evening? How you doing, Robert?
Okay. Hey, Miss Audrey, can I get you to turn your volume down on your end just a little bit?
All right.
We want to make sure that it comes across clear.
What about that? Am I good?
So it don't have a reverb in there.
Okay.
All right. We good to go. All right, Miss Audrey. And I'm going to tell you, first, get him a little bit about your background. How did you get off into this industry of taxations, and what motivated you and pushed you to get off into this before we get off into a deep dive?
Well, again, hello, everybody. I'm glad to be here this evening to talk about a subject that I really, really love, believe it or not. I am from Gaston, Alabama, and I was working for a nonprofit organization, and one of the ladies who was the financial person there, her family had a tax business, and she asked me would I be interested in coming to work for them. So
Wow.
I did, and that's how I got introduced to the tax business in my 20s, working for them. It was awesome. And then a few years later, I moved to Atlanta, met a lady at church who had her own tax business. So I worked for her, and she was like, well, you're pretty good at this. You're smart. She said, you could do this yourself. And I had no inkling that I could actually get my own tax business going. So she told me the steps, showed me the steps, and started from there. And I had just moved here. I've been here probably a year, and so I really didn't know anybody. So I did what my mom taught me to do. My mom is big in the community, back at home, and so I started doing some volunteer work in my community, and that's how I began to build my tax business.
Now that is phenomenal right there because, and again, which keep in mind, I might be calling up on you in the near future for Swimming with the Shark too, because your story, you moved to an area where you didn't have any clients, you didn't know anybody from a can of paint, and you actually went the grassroots way of just getting familiarized with the community to build your awesome story. Awesome story. We're going to touch on that, and I will be reaching out to you for part 2 on Swimming with a Shark because there are some people out there that won't be starting a business, and they don't know I'm in a new area and don't nobody know me, and then they'll talk themselves out of it and then start getting a job, which is leading me to my first question. Do you work with customers or clients that have businesses, and do they come in to file their taxes with you?
Lots of them. Again, my clients are all word of mouth, and many of them are uh, professionals in their fields, career people, VIP, vice presidents, presidents, CFOs, and
Wow.
clients like that. But the part that I didn't tell you about my story was when I ended up having to go work for the lady at we're still friends today. I had just lost my job in corporate America. I was working for the largest black construction firm in the country, H.J. Russell, and I had just lost my job, so I was kind of, looking for something to get into, and then so that's when she made the offer for me to come. It happened to be that season, and she offered for me to come and work with her. So that's how I
Right.
ended up back in the tax industry. I didn't initially move over here to get in the tax industry, but I lost a job because it was a recession in 2009,
Right.
and I lost my job because I worked for a construction management firm, so they did layoffs. So that's how I ended up uh, going back into this tax business and learning
Right.
the tax business, reintroducing myself to it.
Right. So that now a lot of my listeners, audience that's on the show, we talk about how to position themselves in this business world and carve themselves out a um, piece of this life to where you can actually live life on your own terms. But in a lot of cases, especially in the urban communities, we don't know a lot of the ins and outs and the laws and things like that to protect
Right.
ourselves like our counterparts do. So,
Absolutely.
if I am a person going into business, what do I need to do in order to align myself up to make sure that I'm not overpaying for taxes? Now, well, let me ask you this. Let me back this up. I teach my clients and my students that take my course that to get a tax return is not good because a tax return is means you overpaid and
Right.
they're giving you money back that you
Correct.
overpaid. So if I'm a new business that's forming and bringing my model to the forefront, how do I set myself up and align myself to where I'm not overpaying taxes or I'm not underpaying either?
Great question. So the first thing is, what is your structure going to be?
Oh,
Are you a C corp or an S corp? Is how you're going to
okay.
set that up as
Oh,
to how that's going to end up, because traditionally, and what you're supposed to do as a business, which many people don't do, and that's where you come up with the tax return, as you say,
right,
or a refund. What happens is, as a business, we're supposed to pay into the tax, pay our taxes quarterly, or you can send them in monthly.
really?
So yeah, so that is what reduces at the end of the year the likelihood of your taxes being high. Now you could end up with a little bit of an overpayment, but I always tell my clients, because a lot of my clients, I do have some straight business clients, but a lot of my clients, um, they have a side business aside from their job, a hobby that they were doing, and
Hmm.
it started taking legs, and now it became a business, but they didn't want to quit their job because they had great benefits at their jobs. It was like I said,
Right.
they're 70 and 80,000 a year. See, I have six-figure clients, so they
Wow.
weren't ready to give that up. So
Okay.
my thing with them is, and it helps them, because how it helps them is write offs and expenses. Because you're making $100,000, you're definitely not looking for a refund or of any sort. You're looking to pay or to break even. Is
Wow,
what you
really?
want.
Now,
So
how long are they able to claim a loss or breaking even period before it has to go? You have to start seeing some profits.
you get 3 years to claim a loss on your
Okay,
business. That's why you see a
right,
lot of business. You've seen those businesses they up for a little while and then boom, they gone, but then it's something else and another name and it's the same
Right.
thing. So
Right.
people do that. But
Right.
and take me, I am a right. I am a
Right.
business owner and I do taxes. So, this is my business. So
Okay.
that doesn't apply to me. But what you
Right.
can do when it doesn't apply to somebody like me or somebody like you, depending on
Right.
what that business is. So it's all based on how you structure the business from the beginning.
Right.
And then once you do that, and then like I say, you're supposed to pay your taxes in, because when you sign up for your EIN number, they send you a little number in the mail. It's called the EFPT. For you to sign up for an account so that you can
Mhm.
send your taxes in. So like I said, some people can do it monthly. Some people can set it up to do it quarterly.
Right.
So that's where you're sending in, whatever the tax is for that month for your business. You're sending in your payroll taxes if you have employees.
Right. So
Yeah,
that tax can fluctuate what you pay from month to month. So is
correct.
it better to pay quarterly or is it better to pay monthly?
Just depends on the business. If
Okay.
for me, I would say if I had employees, I would do it quarterly or
Oh, okay.
monthly.
Okay.
Just depends. Monthly, I would say that just depends, because, and I say monthly because if you're registered with the state, say you're a restaurant and you're registered with the
Okay.
state, now you can also do them quarterly or again monthly. I have clients that I've done their taxes for their business, and I recommend, let's start off doing this monthly. So we file a tax return with the state of Georgia monthly. So
Right.
that's paying your payroll taxes, your workman's comp, and your city and state and county. In Georgia, you have city, state, and county taxes that you have to pay, and the state collects
Really?
those. Yes, everybody gets a piece of the pie. Yes.
Okay.
So,
Now here's one that I always talk about on the show as well as all of my video content for people that's out there watching. I talk a lot about deferred taxes. Now, deferred taxes was something that I picked up when I was taking the Grant Cardone courses. And
mhm.
the way that I explain it is deferred taxes doesn't mean that you're not going to pay. It's just that you're going to pay them later. Is
Right.
that something? How would a business owner or a new business structure that? Or would you recommend to get into the paying process first to see how how your taxation is going to happen? Or is that something that you recommend to be coached from day one?
I don't for a new business. I don't recommend that because we all have habits.
Right,
So we
right,
really need to we really need to if you know and people that are starting businesses, you have to change your mindset for one. You're no longer
right,
an employee, you are an employer, you're an entrepreneur, or whatever you call me. So that's why I call myself a business life coach, because
right,
you know I can speak to the fact that as a business owner, and I have an employee, I have an assistant, and I have contractors that work in my business. I have about six, and it's a matter of being disciplined with the money. Some people,
right,
if we go back old school, and I'll use my grandfather for an example. My grandfather, when I was growing up, he worked at steel mill in Gaston, and
right.
on the side, he cut grass for extra money. Well, by the end of his life, when he stopped it, he had a full blown business. Nobody really realized it, but he had 32 clients.
Wow. Okay.
He had 32. he had 32 clients at the end of that. Well, that money was not being separated. It was being intermingled with your personal. So a lot,
Really?
right, because they didn't know. He didn't know. He didn't know. He had a
Okay.
seventh grade education. He only went to the seventh grade. He was just doing that. And so when he got where he couldn't do it, and my uncle took over, he had 30. He had 32 clients. That's amazing for
Wow.
somebody to have built built up that many clients. Because he had been doing it, and then after he retired, or
Right.
when he retired, he did it full time, of course. So he had his. But what I'm saying is, a lot of us, the most important thing for a new business owner when it comes to making sure that you have all the tools you need, and especially dealing with the taxes, is you need to separate your personal from your business. You need to go and
Okay.
get a whole separate account for your business money to go in. Like for me,
Hmm.
I have my money that I make for taxes that goes into a separate account for my personal, and then I pay myself from
Right.
there. But some people intermingle it because they don't have the structure set up the way that they should have it set up. A lot of people, if we go back to the pandemic when they were giving out all that money, there were a lot
Right.
of people. There were a lot of people who were legitimate business owners, but on paper they didn't look like it. So because they didn't look like it on paper, they
Hmm.
couldn't get the money.
Wow.
They didn't have the EIN number. They didn't have the structure. They didn't
Hmm.
have things set up the way they were supposed to look like a business on paper. Because now it's not like when our parents and grandparents were coming up. You could walk in the bank and say, Mr. Jones, and shake your hand, and they'll give you a loan. It
Right.
doesn't work like that anymore. You gotta look like you're a business on paper.
And
You know,
so,
and,
so, so, babe, what we're looking at, and what I'm pulling from you is you have to be business from start to finish all the way through.
absolutely,
So the first
absolutely,
thing, in order to protect yourself through the taxing part, you got to look like a business, be registered as a business, and have all of your paperwork and your T's crossed and your I's dotted. So
absolutely.
now, how does that protect you? What can be written off as a tax deduction, or what can be claimed as a tax deduction as far as the business? Because I have been taught, and I just want you to either confirm or deny. When you have a business and when you set up business, you can literally write off everything, especially, and this is coming from the settings of a home base, because we're not
Hmm.
under the old paradigm of anymore to where you have to literally go out and get a brick and mortar building. You
Correct,
can literally do all of your business from home. Can the
correct.
entire home be written off as a tax deduction if it's owned by the business?
No, it cannot. You
Really?
have to carve. You have to carve out a space. The IRS is very detail oriented when it comes to a home based business. You have to have a certain amount of space. They only give you credit for a certain amount of space for a home office for you to
Okay.
write that off. So
But what I'm asking is if the home is owned by the business, it is an asset of the company.
it's an asset of the business, but
Uh-huh.
it still works the same. Still works the
Really?
same because you're putting the house, because it's a residence.
Right.
So it's still, even though it's owned by the business, it's still a resident. It's not a piece of commercial property like you would have with if you had a brick and mortar, or you were over here and
Okay.
you own the building that you were in. That's different because you get
Right.
the you you can write the home into it, but still you still can only claim so much working space
Okay. What
in
about
that.
vehicles? Cars.
You can claim vehicle. You can claim your vehicles that you use, because if you're going out to purchase things for the business, if you're going to meet clients like I do, you're going to meet clients, you get miles. The government pays you mileage, and we get the same mileage rate that they get. I think it is up to, it's 62.5 cents a mile. Is what
Wow.
you get. Yeah, they just raised it.
Okay.
It's 62, say 63 cents a mile,
Mhm.
that you can claim, as far as mileage goes for the business.
Okay, so that 70 cent hike, that was just for a time period that the Democrats gave
Correct.
last year.
Correct. There are a lot of things that we had over the pandemic that, we're going back to pre-pandemic.
Really?
We're going back to pre-pandemic numbers on, everything. So the things, all the credits and perks and things that we were given the last couple of years, those things are going away.
So we're going back to 2021 tax codes, or as far as
Uh,
claiming and itemizing and deducting,
well,
we go back to
well,
pre-COVID.
no. What we did, no, we're going back to like what they were doing. This is what was happening. Your AGI, your adjusted gross income, your income when it came to certain things, certain things, um, they went by 2019. No more. They're going to count your right. So now they're
Wow.
going to count your 2022. So that's what's going to make. So they're predicting that a lot of people's overpayment, which is refunds, are going to be less.
Right.
And then some people who didn't owe, haven't owed, never owed, you're going to be owing, because now you were getting all these credits, and now that COVID is over, we're not getting those anymore.
Well, and I don't want to put claps on people having to pay and owe, but it was I was putting claps on because I just told people this last week that under this with the when the Republicans came in and took over the House, they immediately went to work and cut the funding for those 80,000 IRS workers. And I told everybody that you were going, as a regular layperson in America, you were going to be coming out of pocket this 23 with this 22 23 tax return season. And
Yeah,
you just confirmed what I said a week ago, that they knew what they were doing when they made that rush push to get that on the floor in front of Congress.
absolutely, because
Now,
definitely not going to help regular folks. You know,
right.
it's definitely not going to, regular folks. It is not going to help them. And for me, the sad part is a lot of people shy away from or don't want to pay somebody like me, so they go to these self preparing things, and it's
Right.
like you just don't know how much money you
Oh yeah, I
guys
do.
leave on the table doing
Right.
that. The money that you leave on the table is, you have the money to pay somebody like me if you let
Mm.
somebody like me do the work, because that self guided thing is not going to ask you questions that I would ask you. Prime example, I had a young lady come to me a couple of years ago, and we're friends, we're mutuals, and I was talking with her and talking to her about her taxes. And so I said, "Well, you have a business." She said, "Well, no, I don't." And I said, "Yeah, you do. She has a ministry. She has a youth ministry that she does all year round, and they do plays, they do different things and such like that." I said, "You can count that. You can claim that." She said,
Really?
I never knew that. Yeah,
I
absolutely.
don't
She
think
had
the
like,
average person knows that.
no. A lot of people don't realize if you have, like, I had another person, they like doing building computers, just doing it as a hobby, something that they like. And
Right.
they started getting traction and making some good little side money. Like again, a lot of my clients, they keep their corporate jobs for the benefits, because benefits as a entrepreneur, as far as getting insurance and stuff like that, it's not, the insurance is really not there. It's really not that great.
Right.
And unless you do marketplace insurance, that's gonna be your best bet. But um, they can count that, or anything that you do where you're spending your money. It's a hobby. We'll call it a hobby. Mainly hobbies. Even people who, you got people now doing Uber and Lyft. They don't do it all every day. That's not their primary job. But some people like to do that, on the weekends. They can claim that on their
So,
taxes.
so, so, what I'm getting from you is that there are some benefits to having that business, and to putting that under. Now, well, let me ask you this, and aside, because we've already identified that there are benefits in having the business. Would you recommend that that's something that everybody does, even regardless that they have a regular 9 to 5, to start and
Yeah,
create a business so they can have that protection under the tax law?
absolutely. I do. I have clients that have had that, they relied on the earned income credit to
Uh huh.
help them. And, I have had to really train people not to do it, claim 20 people during the year, and that's kind of what you want. You say that's how you get all your money,
Right.
and then at the end of the year, then you claim get those dependents, then and you get that overpayment. It's really not an overpayment. They're just giving you a certain amount of, money back, because, helping you out if you fall within a certain income bracket. So that's what earned income credit is. You have to fall within a certain income bracket to qualify for it. So these are
Now,
people
did they
with
adjust that for
children.
the better or for the worse on that earned income credit?
Those numbers went back to 2019 numbers. So if, for
Wow.
COVID, right, during COVID, they had increased the numbers of credits that you get, the amount of money you get as a credit, but now they dropped those numbers. And now it used to be 17-year-olds were included in that and no more. So it's only 0 to 16, no more 17-year-olds. So a lot of people are upset about that, because,
Right.
I'm like, 17-year-old is still a kid and they're still in their parents' house, but
Right.
they don't count. They
Wow.
don't count.
Okay. So now, how much of this, what Congress is pushing now with the new Fair Tax Act, to where they're trying to come up with a universal tax? Now, from my investigations, well, I don't say investigations, but from my reading and research, they went back to 2019, no, 1999, when they first introduced this, a
Mm-hmm.
universal tax for everybody, which, again, through my research and reading, this was not, again, this is something that's not going to help the everyday American. But for everybody who was in the $1 million bracket and over, because they had that one common tax, then the middle class and the poor, lower class, was going to make up all of that money that the rich was going to be not paying. So
Well,
is that something that is now being looked at? Because I heard that they're bringing it to the, well, I read that they're bringing it to the floor again with the Republicans coming into office. So if they pass that, how bad is it going to get?
Well, I don't see it. I don't see it happening. And it's kind of like that now. When the overhaul was done when Trump was in office, of course,
Right.
it did help businesses because that this it's a flat rate now. It doesn't go up, so it's a flat. What is it? 32, 37%. So it does help in that manner, but well, and also what they did was when that overhaul happened, when you claim your house, if your house isn't a certain amount of money, it doesn't help you. It's already like that. So you got to have half a million or better. Your house got to be worth a half a million or better for you to see any relief on your tax bill if you were having a tax bill. Because used to, before that overhaul came, if I put a client claim their house, they would get something off their bill, their tax
Right.
bill that they owe.
Right.
It will reduce it. But now it doesn't do anything unless your house is over a certain amount of money.
Okay, so because it helped me a great bit. I mean, I was not mad at all when they did the overhaul.
Well,
So
right, as a business person, of course not. Me either,
yeah, I was
but I feel the effects of it. And also, what's going to happen is there are things that were done that are going away, and people who have never owed before are going to start, that are not accustomed to paying. They're going to be paying, and they're going to be owing, because now we're going to base it on your 2022, the 2022 tax bracket. And of course they moved the brackets. So, the income,
oh
they moved your income brackets. Also, this year, people need to be made aware of that your standard deductions, they did increase your standard deductions.
right,
So, all the standard deductions are increased. So, um, but people have gotten raises, and things like that. So they're gonna feel it, and then a lot of people. I'm gonna tell you something else that people are struggling with as well. This new W-4 form that they put out
whoa,
in
whoa, wait, wait,
20.
wait, 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 wait. You said a new W
W-
four?
yeah, yeah. It is.
When did this
It.
sneak in? Because I mean, quite naturally, I
You
don't fill out a
don't. We
W four,
don't
but
use one, right? So it came 2 years ago. So it is now measured in your deductions. You know how you would say, if I'm claiming two dependents, you would put the number two. Now
yeah.
it's measured in dollars. So if you got two, it's $2,000 per dependent. So if you got two, that's $4,000. Then they also have started asking you on there if you got a second job and how much you make at that
Wait a
on your
minute.
new W.
I don't think that they can affect the second job if you make it in your primary job. So they counting everything as earned income.
If you put it on there on that W-4, it asks that question if you have another job, if
Mercy.
you have a second job, and because when inflation happened, and the recession happened, a lot of people had to go to
Right.
working second jobs and two jobs, three jobs,
Right.
you know, and they, pretty much a lot of people have kept them. They didn't quit them because it was the extra money that they needed.
Right.
So
Right.
they do ask those questions. So I've had to help a lot of people. I really had to go and study it and read it, to help people when they do it, because when they get ready to change, a lot of people didn't, because if you've been at your job 10 years and you left your W-4 form alone, then of course, when you decide to go to another job, now you got this new one you got to do. I don't know what to do with this. People didn't know what to
Right.
do with
Yeah,
it,
because you'd have been on that same one for 10 years.
because you've been doing that same job and it was this way the last time you did one of these. So
Wow.
they were like in a culture shock, a shell shock. Okay, so how do I feel this out? I don't understand it. I don't know what to do. and people don't, didn't know what to do. So I've had to help a lot of clients you know, do that, work on that
Wow.
W-4 form taxes. Of course, also, if you want them to take some additional taxes out, then
Right.
you can write that amount of money, write it in on that W-4 form as well for them to take out. If you want them to take out an additional $75. A lot of people, where they make that mistake at is, yes, get your money all year, but you have to know exactly so
How to
you can
get it.
break. You got to know exactly what you're doing, exactly the amount of money, because getting your money all year, you got to be careful because say I claim it's just me, I'm single,
Right.
and I claim 6 people all year. Well, at the end of the year, when it's time for me to file my taxes, now my W-2 is going to reflect me and 6 people.
Right.
So that's 7. But when I get over here to file my taxes, I have to tell the truth. It's just me.
Mm.
It's just me.
And
So
then they're gonna
what
knock
do you
your
think?
head off because they took
So
out
what
too
do you
much.
think ends up happening when I have to
Yeah,
tell the
they're gonna
truth?
knock
And
your
I
head
don't
off.
claim 7 people all year. I'm gonna end up paying,
Yeah.
but I got my
Right.
money all year.
Yeah. Right. And ain't nobody ever even saved that money that they was getting back all year. So
Of
that's a
course
hard
not.
check to write. That's a
Exactly.
hard.
Of course not.
Trust me, I know.
So that's what you
Let me
should
ask you
do.
this, Tim. Um, because I have a lot of clients and a lot of students, a lot of people that watch the show and listen to the show, even a lot that follow me. What about cryptocurrency and NFTs? What is the new tax code or the tax laws for that?
Well, right now they're working on that. Right now it's only a question asking you
Okay.
on your taxes if you do. They're
Okay.
not asking you numbers, not right now.
Okay.
But they
Because
do ask you.
well, the reason why I asked because I heard that the only way that they can um, tax that is if you pull it out of the crypto world and get it exchanged into the American dollar, and then they count that
Right.
as earned income
Earn income,
because
correct.
it came out of the crypto world. Because and I
Right.
knew that the Democrats was playing with that, and I keep saying Democrats because they was the ones that really had an issue with cryptocurrency because they
Mm-hmm.
couldn't find a way to tax it. And you got, and
Right.
I understand why, because you got a lot of kids that are millionaires.
Mm-hmm.
And I mean, I actually had one guy that was on the show in season one. I mean, this kid, I mean, he was a genius. I'm taking nothing away from him, but he had a huge mansion with folding chairs. I mean, real talk.
I believe it.
$3.8 million mansion, folding chairs, bottled water, and they swiping the crypto card, ordering pizza and everything else. And I thought,
That's
like,
crazy.
oh, this dude ain't even graduated high school yet. He can't even legally vote, but he's a millionaire.
Buy a
Have more money
car.
than me.
Buy a
And I
car.
thought that it was funny or odd that when they came into office, it was the big push to tax cryptocurrency, but they couldn't because cryptocurrency is still dubbed fake money.
Right.
So they came up with the well, if they pull it out of the crypto verse, then we're gonna hit them in the head and tax it on that. And at that time, they was taxing 24.9% on every dollar.
Right.
So
So
so they still they still
you're
haven't
gonna
found
get
a
them
way to tax. I mean,
right.
that's what my question is. They still haven't found a way to tax it.
Right, and it's being it was we discussed it because I go to do IRS training every year, and
Really?
that was yeah, that was talked about. So it's still right now it is still a question. It's just like just a week or so ago. Now before they had put out that we were gonna have people are gonna be getting a 1099K for using Zelle, Cash App, PayPal, Venmo. So now they pull back on that. They're not gonna make you this year. They're not going to make you. They're not going to make you report it. but it was
Oh,
on
great.
the books
Okay,
to
so
be
I
reported.
gotta
So
hear.
they, for whatever reason, I haven't seen the reason why they decided against it, but
Right.
they decided against it, and so now you don't have to. This year you don't have to report. So you don't, nobody has to
Right.
report. And I think I heard that Wells Fargo said that they were not going to report any Zelle transactions on anybody's behalf.
Really? Now I
Yeah,
just got the notification from Venmo that they weren't going to send out any
correct.
statement for the 10. So, but I didn't know that that was.
But
I thought that that was just Venmo. I didn't know that it was all
no, it's across the
online.
board. It was Cash App, Venmo, PayPal, and Zelle. So Wells Fargo stated that they were not going to do it, and so like right after I heard that is when they sent out a news briefing that we don't have to work. People don't have to worry about. They won't be getting those 1099Ks. In the beginning,
Okay.
when Uber first started, they were sending people to that because I had clients that was doing Uber and they got a 1099K, but then the next year after that, they stopped sending them out. But they used, so
Really?
now they don't even do it anymore. And
Now, let me ask you a question because I make I do a lot of business online through the platforms of social media.
okay.
Does that is that going to extend to business owners or social media influencers that's making money through social media platforms?
It's a possibility. It was not mentioned or brought up in any of the sessions that I was in, but it's a possibility. But it's only probably based on, I'm sure they're gonna, whatever it is that caused them to stop it, I'm pretty sure that they're gonna readjust it and they're gonna make it happen next year. Because even with you being an influencer or whatever on any of those social media platforms, and you get paid, you're still using something. You're using, you know, PayPal. You're using Venmo.
Yeah,
You're using Cash App, or you're using your bank account to, whatever type of money, you're kind of like my grandson uses my YouTube, and he has the subscribers, so now his videos are monetized. So we had
right.
to attach a bank account so that they could transfer his monthly money into that account each
Right.
month. So, however, it's a transaction, they're not requiring these platforms right now to provide, because, of course,
Right.
any type of transaction like that, it has to be reported to the IRS. It's just like if you pull out of your 401k, then the financial institution that is managing your 401k have to send you that 1099-R, and they report it to the IRS
Wow.
just like they would, yes, just like you would a W-2. And you have to report it on your taxes. They report that you took money out of this thing and whatever. Same thing with your W-2. They have, whatever company you work for, they have to send a copy of what they give to you into the IRS. So they already know exactly how
So
much
they
money you got.
making it so you can't lie about anything, or
No,
you
they
can't
know
hide no
exactly.
one.
No, you cannot. They know exactly. And if you don't file it, they're gonna, if you were getting a refund, or even if you weren't getting a refund, if it was something that you did, because I've had clients to be in a hurry and didn't wait on all their documents
Right.
and didn't file something, and they got a letter. Well, I got a letter. Well, do you have it? And did you get that? Well, yeah, I just got it. Well, they're holding your money or your refund until they get that, because they know, well, they already, people already, well, they know, if they know I got it, or they want you to report it. And if you don't, it's a crime not to report any money. I always tell people the IRS is the biggest gangsters out here. They are first of all, they are not a branch of the government at all, first of all. Second, everybody else, the CIA, the FBI, the NEC, the police, Anybody, they all got to get a warrant to go in your stuff. The
Uh-huh.
IRS does not have to have a warrant to go in your stuff. All they got to do is say you owe it, and it's automatic. You got to prove you don't, but
So
they
they're
don't need a
not,
warrant.
they're basically just unsupervised, unsupervised entity. This is why they keep going up on. Oh, hey, ladies and gentlemen, you guys have heard it here. We're having a deep dive talk with the tax lady, Miss Audrey Toles-Miller, out of Atlanta, Georgia, who has a tax business called Audrey Toles-Miller and Associates. I look, she's told me some stuff today, family, that has peeled my wig back. I mean, for real. I learned some things that I didn't even know. So what can the average person do, or what would you recommend that they keep up with during the year, or just not even during the year, forever, as long as they get in the earn income? What are some things that they can do to protect themselves and not just be railroaded by all of the new laws and things that are changing?
Well, the first thing they need to do is consult a tax professional. Doing it
Mm,
yourself is not a good idea. The tax laws change every year. Something falls off every year. We got a whole bunch of stuff that fell off this year. So people are gonna, and it's funny how, when people go to a lot of people don't know and don't realize it and don't know it until they get into it, because
right,
they're not staying informed. And if you have a tax professional, that is one of our requirements. We have to have so many ethics classes, so many classes, hours of law, ethics, law, um,
right,
every year. We have to have 18 hours of continuing education. So, if you want to call it like that, of
right.
what's happening, what's new, what's coming off the pipe, what are their changes like. I don't know if you know it, but the IRS has turned their excuse me,
Mhm.
the U.S. Treasury is now handling, quote unquote, the money for the IRS. As far as
What?
yeah, that happened last year. They told us, the commissioner, um, the IRS commissioner, he told us they do a meeting where we do he does an address every year. Yes, the Treasury now is handling back taxes. If you owe any type of money, they've given all of that over there to them. So now people are going to start seeing if you're right. Exactly. So your stuff is going to, as far as that part goes, it's going to start moving a whole lot faster. It's going over to the Treasury Department. The U.S. Treasury
Wow.
is handling that. They did
Wow.
that. They rolled that out this summer.
Wow. Yay,
That was
ladies and
rolled
gentlemen,
out
I'm
this
telling
summer.
you, if you don't have you a tax person and you are needing somebody that has the know-how and can guide you to the best things for you and your family, how can they get in touch with you, Audrey, if they want to reach out and utilize your service? Now, well, let me ask you this before we put that out there. Uh, we will put the information out there to everybody in the state of Georgia because you're licensed and set up in Georgia. But you can file
I,
taxes for anybody in the country, correct?
right, I am certified to
Okay.
do all 50 states and U.S. territories. I do have clients in California, Texas, New York, Florida,
Okay.
Tennessee. So I do have Illinois, Minnesota,
Okay.
Missouri. I have clients
Right, well,
all
let's put
over.
your contact information out there on the kite. We're gonna send this out here on the wire. If they wanted to get in touch with you and know more about how they can protect themselves, as well as make sure that they're not getting raked over the coals, because you guys have already heard it. There's a lot of stuff that's changing, and y'all lost a lot of tax credits because to go back to 2019, think about that. Just think about what that is saying. We're They're going backwards. So there's not an
Right,
improvement. They
right,
going backwards. And that's going to make a lot of people wound up paying more money because
right.
all of those COVID credits, you don't have them no more. So if they want to get in touch with you, Miss Audrey, how can they get in touch with you and utilize your service?
They can get in touch with me through my office number is 678-980-9992. You can find me on Facebook, Audrey Toles-Miller. My business page is One Accord Tax Service on Facebook. And I also have a website, One Accord Tax Group. .org is my website, so you can also contact me through my website. Um, and again, my name or One Accord Tax Group on Facebook or Audrey Toles-Miller on Facebook. You can find me there. And again, my number is 678-980-9992. Okay?
9992. I'm just posting and typing all of this in so everybody can have it. If you can check out the comments, ladies and gentlemen, if you read looking, whether you're on the live or you catch this on the replay, all of her information will be there. We're just going to verify this. This is One Accord Tax Group. That's on
Yes.
Facebook. We're just going to type in social media, period.
Yes.
And then they can find you. And then the phone number is 678-980-9992.
Correct.
And so we're going to get everything out here for everybody. Listen, hey, y'all, I recommend that you give Miss Miller a call, especially if you're talking about protecting yourself and finding out all of the interesting things that's coming up right here. That's going to be happening. Now, they can't even file right now, can they? Nobody can file.
Businesses can start. You actually is you can get with your tax person and start filing them, but they won't go into the IRS until the 23rd. Um,
Listen,
Also, make
see, I'm glad
make
you
people
said
aware.
that. I'm glad you said that. Now it makes sense why they rushed that tax or to cut that funding off
Mhm.
3 days after McCarthy was elected the House Speaker. Because if
Mhm.
you guys remember now, they went back and forth from Monday to Thursday. And
Mhm.
then after Thursday, he was pushed in, and then that to cut the funding to those 80,000 IRS workers, they cut that funding and then put it on the floor Monday, and it passed. Ladies and gentlemen, if y'all don't wake up and smell the coffee and see what's going on, it's going to be a lot of people that's going to be hurt this tax season.
Right,
Uh,
and also I want to remind people about the
uh,
PATH. I'm sorry. I want to
no, no,
remind your listeners about the PATH Act. It is a law. If you're a head of household and you have dependents, and you're looking for a refund, you will not get it until after February. You won't get
say,
it
say
until
that one more time. Say that one more time.
the PATH Act goes into effect. If you're a head of household, you will not get your refund. They will not start issuing refunds until February 17th if things don't get backed up. There's a law because they have like a grace period in between there. So it's a
Right.
law with this grace period. So from the time the tax season starts up until the 17th, if the grass is that. So if you're single and you're getting a refund, you'll get it immediately. But if you're a head of household, then you won't see that refund until after the 17th of February. And
So
then they
it ain't no sense even trying to do no rocket refund and rapid refund. It
Well,
ain't no sense.
I don't have any clients that, like I said, all of my clients are, high end professional 6-figure clients.
Right.
So they're not looking for that. But for those people who deal with those type of things, then they do have a cash advance. So how that works is
Oh. Now, see, that's different from the
if,
old school days. So there was
right, because
really no.
those are predatory. Those are predatory. They were charging people 600% on their money. So if you did that, and then you had to pay that back. Now they don't charge
Right.
you to get a cash advance anymore. You used to charge that RAL, but they don't charge it.
Right.
It's just called a cash advance. So Some people, if you're eligible for it, and it depends on the bank. Also, there are four financial institutions. There are only four that are authorized to receive any refund money. That is Santa Barbara Bank, Republic Bank, um, Refund Advantage, and EPS Financial. Those are the only four institutions. So if you're using a professional tax preparer and they say they use a third party bank, that is the third party bank, or even TurboTax. TurboTax money goes through Santa Barbara. They had a contract with Santa Barbara Bank. So even your money is funneled, is funneled through there. So how that works is I do your return and you say you want me to take, I can take my payment out of your refund if you have one. I can take it out. So I use the bank. And what happens is IRS sends the bank the money. They separate their little fee out, my fee out, and send you, what is whatever I told you that you're gonna have left over. And that's where people have a problem because some of these banks, the fees are high. They can be. They can be, but I like using it as a tax preparer because I don't know where people have gotten it in their heads that tax preparers work for the IRS. We do not work for the IRS. We work for ourselves. So when I prepare your taxes, I'm doing a service. I'm supposed to get paid. The IRS does not pay me. I ran into that a lot when I first started, and a lot, I lost money. So that's the reason why I started using. I use a third party bank where I can take the, you can pay me if you got a refund. We can do it this way. That ensures that I get my money because it's gonna come straight to that bank, and they're gonna take my fee out for me and whatever fee they charge to process and handle the money. And I had a lot of it in the beginning where a lot of people. Then I've even had people, that wasn't getting a refund, still end up not paying me or whatever the case may be. So, I've kind of graduated from people like that. I have, word of mouth clients, I have best clients. I have, I set a goal to. Those are the kind of people that I want to cater to. Professional people because they understand and they know, hey, this is what it is, this is how it is, and I got to pay. So I don't have any problems. Very very few problems with getting paid. Either if they're getting a refund enough to pay me out of that, they do, and then some of them, even if they are, they rather pay me out of pocket and then let the IRS just send it straight to them so they can bypass those bank fees that are there. So. But
ladies and gentlemen, you heard it right here. You heard it right here on Plugged In. I am Robert Muhammad, your host, plugging you in with the information that you need in order to make you successful. And we've had a great talk. If you guys didn't catch it live, you can catch it on the replay on YouTube. You guys already know that when I have poor guests in, this post is only going to be up for 72 hours. So you got 72 hours to recheck this out, or then you would have to go and start watching it on the YouTube channel or listening to it on the download on the podcast, which we're on iHeartRadio. We're also on Spotify. We're also on Apple Pod with 14 platforms to where you can listen to this podcast wherever you get your podcast from. Hey, Miss Audrey, I thank you very much for coming in and giving my listeners a wealth of knowledge and information. And I have even learned some stuff myself. So, hey, guys, you guys stay tuned. We're going to be showing you. Keep tuning in, and again, you can catch it on the replay if you're not going to catch it live. And we're going to keep dropping this information for y'all. So I will see you guys on the other side. Peace.